Phoenix is seeing a housing market shift. Is the housing market in a bubble? If you're moving to Phoenix or living in Phoenix and wondering if a housing market crash is coming, this information should help you. Yes, there has been a housing market shift. We are now in a buyer's market for most of the valley, but not all areas. So let's break it down. Hi, this is Diana Benson with eXp Realty, The Great Escape, where we help people move to and around the Phoenix metropolitan area. So if you have any questions about the market or moving, please feel free to reach out. All my information is listed below in the description, and I would love to hear from you. You know, the headlines are always scary. Headlines like this by Fortune magazine: Boise, Las Vegas, and Phoenix look like housing busts. The interactive map shows the shift in your local housing market. Or like Arizona Families Channel 3. Sales plummeting, rising interest rates. What's in store for the Phoenix housing market? Well, one thing to keep in mind is that they're talking about the volume of sales is plummeting. The number of sales, not necessarily the price of homes. Yes, price overall has declined 8.3% since May, but they are still 3.5% higher than last year at this time. The good news is that 65% of homeowners have been in their home longer than 2 years. So this means that they have equity and they'll be able to still sell their home at a substantial profit. Sellers that wanted to sell over the last couple of years waited as there were no homes to move into. Now, many don't want to give up their low interest rate payments. So where is that inventory coming from? Well, builders and iBuyers such as Opendoor, OfferPad, and Bradfin. Phoenix was ground zero for these companies rolling out the iBuyers. This is where the company buys your home and then turns around and sells it for a higher price. The competition between all the iBuyers ran up the prices. In fact, there were times that they would pay more than you could get on the open market due to this fierce competition. So this is the reason that the homes in the first-time home buyers market became so unaffordable so quickly. Opendoor and OfferPad have now been selling off their inventory. Homes under $600,000 have declined about 9.8 to 12.3% since May. As the homes over $600,000 were not targeted for purchase, this market has not seen the same type of decline. The iBuyers dropped the prices immediately to liquidate their inventory. Now, Opendoor still has 1,400 homes and they are reducing their purchases. You don't see these typical buyers reducing prices at the same pace, and they're still selling. But due to the higher interest rates, the higher cost of capital, and increased supply, these iBuyers are selling most of their supply and slowing down their purchases. In fact, Bradfin just announced that they are closing their iBuyer business down and laying off 862 employees. They are not the first ones either. Zillow closed in 2021 after losing $880 million in 2021. Now, Opendoor lost $144 million in 2021 and $54 million in the second quarter of 2022, even though their revenues increased 254% up to $4.2 billion. So let's take a look at why this is happening. Here are some samples of Opendoor's recent purchases and their resales. The first one sample here is where they purchased it April 29, 2022 for $223,700, and it's now listed for $191,000, and it's been on the market for 200 days. Now here they purchased one for $290,000 in August, and it's sold for $265,000 in January 2022. This home was purchased 6/22 for $509,200 and was sold for $430,000 in November of 2022. And here's one purchased for June 22 for $640,000 and it's now listed for $565,000. Here's one purchased for $599,100 and it's now listed for $540,000. And here's one that was listed for $572,300 and it's now listed for $429,000. Now, another thing affecting the market are the short-term rentals. Many cities have now put new policies into place. This has reduced the appeal and the profitability of the short-term rentals in these communities. Therefore, these homes get converted to long-term rentals or they're sold. Now, this has added to the rental supply and also contributed to the supply of homes for sale and some downward pressure on pricing. Now, as interest rates increase, the amount of homes under contract has decreased. This has caused most markets to enter a buyer's market. But not all communities are the same. As you can see from this recent Crawford report, which reports supply-demand data, some communities are still in a seller market. The marketing times have increased to 36 days. Now, one way the market is handling these increased interest rates is by having the seller pay concessions to buy down the interest rates. The rates can be bought down for a couple years or permanently. This reduces the payment so a buyer can actually afford the home. The typical concessions paid by the seller is approximately $9,000. So people are asking, is it a good time to buy? What happens to the homeowner if the housing market crashes? Will home prices drop in 2023? Well, according to CoreLogic, they do believe that there will be a little bit further decline in 2023 based on the amount of appreciation that has occurred over the last few years and due to affordability. Now, interest rates will be the driving force. Once rates get back down to 5%, the buyers get off the fence and back into the market, and the market responds quickly. So keep an eye on inflation. Mr. Powell stated that until it gets under control, he's going to continue to increase the interest rates. The quicker we get further into the recession and inflation decreases, the quicker the market will get back to a balanced market. Now, typically, October through December has been historically the best time to buy with fewer competitors and more choice. This allows you to get a better price, call for repairs, and allows you to have all the inspections and an appraisal so you know if you're making a wise investment. Now, we have seen some changes this week with the interest rates going down to 6.64%, and there was a little uptick in the market. So if you have to buy now, you have all the benefits of being a home buyer, or a home owner. When the interest rates were at 3%, people were willing to go $50,000 over list price. Now that's no longer necessary. You can be more selective and you can do your due diligence. It's a buyer's market, which is typically the best time to buy. If you need to move, it's a good time. You can't time the bottom. Just like in the stock market, you never know that it was the bottom until several months later. So if you want more details on the housing market data about buying, selling, or investing in real estate, please feel free to call, text, or email. All my information is listed below. This has been Diana Benson with eXp and the Great Escape, where we help people escape to their next chapter.